Welcome to the Shock Your Potential podcast with your host, Michael Sherlock. We all have potential, but sometimes we need inspiration to get us to our peak performance. Whether you are starting out in your career, ready to move up the corporate ladder, or taking the leap into entrepreneurship, Michael's guests provide powerful tools and resources to shock your potential. Shock Your Potential is a global professional development training company committed to your unique journey. Learn more about us today at shockyourpotential.com. Listen in to today's expert.
Thank you for joining us on another episode of Shock Your Potential. And as always, I am your host, Michael Sherlock. All month long, we are talking about an issue that is very important to all of us, but maybe we don't always take enough time to talk about. And my guest today is going to talk to us about how he helps people with a very specific part of the importance of their financial well-being, and that is their credit and credit score. And you're going to love it because I told him before we started taping that if he and I would have met long ago and got married, we would have been Michael Sherlock Holmes, both of us together. Excuse me. So my guest is Michael Holmes, and he has helped thousands of people in the last 10 years to raise their credit score, a combined total of hundreds of thousands of points. And this includes converting hundreds of renters into home buyers, which we know is so important and what a great opportunity. He's been in the financial industry for almost 30 years. He has a Series 7, 63, 65 licenses, as well as his lending and real estate licenses, which means he likes taking tests for some reason. I don't know. We'll have to find out what's wrong with him in that vein. And all of this information, all these incredible licenses and experience has been funneled into Delta Credit Restoration, which he founded in 2010. He has a brand new book called The Not So Common Sense Approach to Credit Repair, and it's quasi-inspirational and instructional and comes at a time when, for a lot of people whose industries have been so severely hit by COVID-19, that they have felt the effects, and not just, by the time we got to the end of 2020, but how they felt in January and February and March. And hopefully some of them are finding some peace now that we're into April, but goodness knows that things like this can hurt us for the long term. So Michael, thank you for joining me today.
Thank you for having us.
It's great to talk to you. And I actually have a little bit of background in this specifically because long ago, when a planet and galaxy far away, I used to work for an organization called Consumer Credit Counseling Service. And we weren't helping people necessarily to repair their credit, but hopefully not to harm it any further, and give them some options that might be alternatives to bankruptcy, or help them to make that decision if they were there. And so credit scores and your credit history is so vital to people, and it can be hit pretty hard very easily. So I'm really looking forward to, learning more about what you do. So in your own words, after I gave a little intro to your bio, tell us a little bit more about you and your company and how you help your clients to shock their potential.
Well, about 10 years ago, I was a bank manager for, we'll just call it a no-namer bank. And I had two branches that I was managing, and we had a lot of people come in trying to get a loan. And we had this credit repair company that we were sending them to in hopes that they would get their credit fixed and come back. And it never really happened. And about 20 or 25 people in, I decided, well, let me call and find out how things are going. And basically, they all got ripped off. So we started helping customers on our own because one thing that I found is, one, it was very hard to get reputable help. And two, the baseline of really what people needed to understand about credit and financing was so convoluted that it was just a lose-lose situation. So we started the company Delta Credit Restoration really because we couldn't find, and we're in the Tampa Bay area here in Florida, we really couldn't find a reputable resource locally that we could count on. And then one thing led to another. Now 10 years later, here we are helping our clients. And we have a very different approach to credit repair, which we'll get into, but which is, I think, more akin to what you were probably doing back in the day. And we can go over all that. But really, for us, Delta was established to be a reputable alternative because what we always tell our clients is 99% of the companies that really do what we do are fraud. They're either fraud in their methodology or they're fraud in their intent. So you just got to be real careful when you're asking for help. And just like with COVID help, sometimes in the end, you need help from the help that you got. And that's kind of where we're at now.
That's so true. And I remember when, so when I was a part of Consumer Credit, it was a really large nonprofit organization throughout the US. I don't even know if they exist anymore. I think
Hmm.
they got bought out by somebody else. But there were a strict set of ethical guidelines,
Yeah,
that we practiced in our relationships with our banking and lending partners. I mean, that was sacrosanct. That was so important to make sure that we were helping their customers because they were referring them directly to us. And I remember by the time I kind of was moving out of that industry, the rise in all these other kinds of organizations like ours, because
yeah,
people said, "Hey, we can make money in this,"
yeah.
you know, and we're
Not a
like,
lot,
"Oh,
but some, yeah.
yeah, not a lot, but you can." And you're
Yeah.
right. That was, I know, always the worry is, what's this going to mean for the end consumer who really is needing help, doesn't and needs guidance and needs the support, but may not be getting exactly what they need because somebody has some different motives
Uh-huh.
for creating this business. So I can see how, unfortunately, you found a partner who wasn't a very good partner.
Right, right. And that's important because if you're going down the wrong path, and it's just taking even longer to accomplish your goals. And a lot of times, this stuff is time sensitive. You're either getting sued, you're getting evicted, or you need to find a new place to live. You got to get that
Yeah.
job security clearance. You need that car insurance, and your credit can affect all those things. It's not just, hey, can I get a credit card? It's a lot of other things that your credit will affect and offset your quality of life or standard of life because you're just paying ridiculous fees and interest and that sort of thing.
Well, and I think I don't know anymore. I'm so far out of this industry, but even when I was in it, I volunteered for, like, there was a large nonprofit called Economics America. So I went into
Mhm,
schools and taught things about, the importance of your credit score and,
mhm,
what to
mhm,
watch and how to check your credit score once a year, for instance. And, I mean, my husband and I do that every year. We have it timed to when we do our taxes. So every
mhm.
year we get all of our credit bureau reports. We check them for,
Nice.
and I'll tell you, not every year we find problems, but probably every other year we find something that's just wrong or just,
Yeah.
needed to be fixed, or, where did that pop up? And that kind of visibility is really important, but I don't even know if, most people know that they can and should do that once a year, or
Yeah. You'll be
more
surprised. One
frequently if
in
they need to.
one in three people actually have an issue on their credit report that needs to be resolved. It's a
Wow.
pretty astounding number, either an erroneous number or something that maybe shouldn't be there, but is there, but maybe written the wrong way. There's always something on about a third, because you got to figure there are billions and billions of people that use it, and there's billions and billions of requests to change the information every day. And I don't care how good of an organization you are, there's going to be huge cracks in that. And from an operational perspective. So, to take the lighter side and not to say that it's intentional on their part to have these errors on there, say that, hey,
Right.
just from a logistic standpoint, you, the consumer, need to be aware of what's on your credit report. And again, for us at Delta, it's not about the score. I could care less what a credit score of a customer is. And that's kind of a weird thing to say from a credit repair company. But for us, it's not the score that matters, because your credit is not the score. Your
Right.
credit is the behavior that
Yeah.
leads to the score. And that's that
Ah.
not so common sense approach that we talk about. People want to worry about the score, but they don't want to worry about paying their bills on time to get the score, right? That's a
Yes.
bit of an issue, right?
That's a
So,
good point.
so we've got to kind of circle back now, and we focus on two primary behaviors. The first behavior that we really hone in on is, are you cognizant of what's going on around you financially? What's coming
Hmm.
in? What's going out? How much is it costing you? How much are you earning? What is the relationship that you have with these merchants and creditors that have a financial backbone to it? Do you know the terms and agreement? Do you know what happens when you default? Do you know what happens when you give them a deposit? What are the parameters of your relationship? And then the second behavior that we look for is that you're financially buoyant, right? And that's
Hmm.
ultimately what lenders want. They don't care about anything other than, can you pay them when things go wrong? And to
Right.
do that, you have to have a certain kind of financial makeup to make that happen. All of that has nothing to do with your score directly, but it does have a very direct relationship as to whether or not you're lendable. And so when we
Yes.
get a customer in, we have to explain that, because it kind of sets the tone that, hey, this isn't about your score. This is about your behavior and the financial longevity of what's going on. And it's not necessarily about fixing your credit for a lot of our customers. It's about making them lendable. right?
Mm-hmm.
So if you're coming to me to get a loan, we got to focus on you being lendable. If you're here to get out of debt and build a financial future, then we're going to talk about building your credit as a behavior. And that's that not so common sense approach.
Yeah. It makes me think back. There was a client that we had who actually ended up becoming a volunteer for me when I worked at Consumer Credit, and she did a lot of classes. And I remember when she and her husband came in as clients the first time, because he had gone through, he had cancer. And so he'd had a lot of chemo and a lot of hospital stays, and they had accumulated about $40,000 or $50,000 in medical debt. That was, what they're out of pocket, not what the insurance company had already paid. And I think, she was a stay-at-home mom, and he probably made $25,000 a year. And they first came, and it was a situation where they could have cleared that with bankruptcy, but they didn't want to. They wanted to pay that, and they wanted to be responsible for it. And it took them a while, but I'll tell you what, they were so dedicated that, and because of them becoming volunteers, and especially the wife, they got to know some of the bankers that were on our board of directors, and it was amazing when they were able to buy a home. Because most people who had gone through what they had gone through, and had that kind of impact, because for a while they couldn't keep up with the bills, and then when they, got him back working, they just tackled it and gave up a lot of things. But I remember when they got their home loan, because, and they got it because their diligence in what they did showed the behavior and showed the outcome, and showed just exactly to your point, when things get tough, what are you going to do? They could have wiped it all out, and they didn't. And I don't think anybody would have, blamed them had they said, we just can't do it. We need a fresh start. But boy, what did that tell you about their commitment to honor their debts?
Well, that's one of the big lessons that we try to teach our customers, is that, things are going to happen to you, and you really can't change that. And that's why we have a savings mechanism in our credit repairs, because you've got to prepare for the inevitable. Right? People come to me all the time and says, "Oh, I only have bad credit because I lost my job, or I got hurt, or I got divorced, or I had children." One of these events was this catalyst that caused that spiral, and they're probably absolutely correct. But the question is are you prepared for that? Because the truth of the matter is, it happens to everybody. Everybody gets fired. Everybody, gets hurt. Everybody potentially gets divorced nowadays. So are you financially prepared for that? And that's really where we're at now. Is we're trying to redefine what credit is, because as long as you're worried about a score, you're never worried about, hey, I just lost my job, now what? Right? So we've got to focus again, circle back, go back to the basics, and kind of do like grandma used to do. You fill out the check register when you're doing transactions, little things like that make a big difference. Grandma always had cash. She always had money, right?
Yeah.
She always had money. She was never broke.
Nope.
But she always got paid less than everybody else.
Yep. And she always had that envelope of money that it was also hidden away, that Grandpa never knew anything about.
Exactly. Right. So, really for us, it's about getting back to the basics and doing those things that are going to, again, that second behavior we're looking for is creating that longevity in what they're doing. So, the first thing we always tell our clients is when they come to us is, well, what are you here for? Right? Yeah. Are you here to buy a house? Are you here to get from under that car note? Are you're trying to get from under the debt or those student loans that are mounting up? Like, what are you here for? And once you know what that is, once you know what your why is, so to speak, then you figure out your how. Yeah. Right. And it starts with, creating that budget. And then from the budget, you work on the credit as in a more traditional sense. So really, when we get a client, and that's how we help, is we focus in on the goal first, and then we figure out a way to, well, how do we get to that goal financially? And for, what I always tell people is the cornerstone to your credit repair is not found in your credit report, right? The cornerstone to your credit repair is found in your checking account. How you handle your assets will determine how you handle your debts, right? If you can't pay the light bill, you don't care about the credit card payment. If you can't pay the mortgage or the rent, you don't care about that 2-year-old medical debt that's going to eventually lower your score. So we've got to get the everyday basic stuff right, and then couple that with knowing what your rights are as a consumer with the Fair Credit Reporting Act, the Fair Debt Collection Practices Act, the Credit Repair Organizations Act, if you're using a credit repair company, and then use that knowledge to then make sure that as you're going along the way, you're not being taken advantage advantage of.
Right.
Right. So that's really how we're really going to help our customers. So the ones that want us to fix their credit, step one is, of course, you pull the credit report, and then you pull 2 months bank statements, and then you pull a pay stub. Those are the three things that you're going to need to fix your credit. The first one being your bank statements. And what we'll do is we'll go through each of those and we'll figure out, well, where's your money going? What is your core cost of living? Like, what does it really cost to be you? That number for us are 5 transactions: rent or mortgage, utilities, food, car note, and gas for your car, right? Beyond that, everything else is in a different list, right? Because those are the 5 things that you're going to pay for no matter what, right?
Right.
And ultimately, what we want you to do is have some sort of savings mechanism in your budget. And we want their long-term goal to be to accumulate 3 times that core cost of living in savings. That way, when the inevitable does happen, they've got the money to ride that out for at least 90 days. Yeah. Now, if you're an affluent person and you're making $80,000, $90,000 a year, you probably want to put a little bit more back, because to find a job at that pay rate is a lot harder than a $13 or an hour job. The more exclusive your job is, the harder it is to replace. So you want to have more of a buffer there. But the savings is really the first of 4 financial safety nets that you really should have in place. The second is we want to make sure that you've got available credit, not just maxed out credit cards, right?
Right.
The third thing is we want to make sure that you're properly insured, right? You've got medical coverage, you've got car insurance. If you've got children, you've got life insurance. If you own a home, you have homeowner's warranty insurance to cover the things in the house, like the water heater and the air handler and those sort of things. And last, that you've got investments, right? When you wake up, you need to have made money that day. You don't want to always work for the money, because you'll exhaust yourself. You've got to have your money working for you. It's part of your team, right?
Yeah.
And truth be told, if you've got those 4 financial safety nets in place, savings, available credit, insurance, and investments, right? And you've got the financial elbow room in your budget to contribute to those things on a regular basis, you've got good credit. It has nothing to do with your score, right? Because again, if you can pay the mutual fund, you can pay the light bill, right? If you can pay the insurance policy, you can pay the rent. So you've got to be able to make sure that your everyday budget has those things in there. Right. And so that's why the savings mechanism is one of 3 non-negotiable items that they must have in their plan. The second is we want everybody to have an allowance in their budget. That's the blow money. That's the don't ask me about my money,
Exactly.
That is super important that they have it in there. And then the third thing is we want to have what we call redirect. So as you're fixing your credit, you're going to find items on your credit report that you're not going to get rid of by just deletion, right? They're legitimate debts. They belong on the credit report. And I don't care what the guy online says or the guy from the multi-level marketing company says, it's not going to go away, right? And if it does, it's going to come back, or they're going to sue you for it.
Right.
So we want to have a sort of a separate savings going on, so that as you're clearing that credit report and getting those things deleted, if you're faced with having to settle or pay one of those debts, you've got the money set aside. You don't want to spend your savings, because if you have the inevitable happen and now you've paid off all these credit card bad debts and you've got nothing left, well, you're right back where you started. Right?
Yeah. And you're just, again, one crisis away from collapse again.
Right. So as you're creating that budget and you put that savings mechanism in there, you put that allowance mechanism in there, you put that redirect mechanism in there, the reason why those 3 categories are so important as far as your budget is concerned is because everything else in your list, rent, utilities, food, car note, gas, baby daycare, whatever, that's maintenance. That's what you're already doing. And you're not trying to do this to run in place. You're trying to run and catch tread and move forward. So if you really want to, shock your potential, right, you've got to do something to create, that you got to go from that kinetic energy to the potential energy, or back, you've got to get something to get you to move forward, right? So that's what those 3 categories does, is that it's the only thing that will get you right. The savings builds your wealth, the redirect pays off your debt, and the allowance keeps you on track as you're going through the process. That's the first step to credit repair. And notice it has nothing to do with what's on your credit report.
Yeah, absolutely.
You know what I mean?
Michael, when they come to you and they they think, okay, I'm going to go to a credit repair, credit
Mhm.
restoration business. Do many of them think that this is going to be a quick fix or
Yeah, they all think it's
yeah,
gonna be a quick fix.
yeah,
And they don't, and the expectation a lot of times is, hey, we're just going to get it deleted. And, that's a dangerous place to be when you're paying somebody, because the likelihood of everything coming off your credit report permanently isn't likely. And the
yep,
techniques that they use to do that are a lot of times considered fraud. So it's, you still lose for winning, because it can come back and bite you, especially if you're a professional. So if you're a realtor or a lender and you're using these companies and it comes back that a fraudulent technique was used, that could threaten their license, that could threaten, fines and everything else. So you just got to really, really be careful.
wow, gosh, I never even thought of that. And we are talking about all things credit, credit restoration, credit repair, but really we're talking about financial decisions, for individuals. And all month long, all my experts are, I mean, you've already given us a ton of tips, but if somebody is listening right now, I think about, my listeners, we have, a really interesting mix. We have a lot of experienced sales professionals. We've got a lot of entrepreneurs, and we've got a lot of people that are kind of young in their career right now. And in any of these cases, you have people that are doing well, but you also have people, especially after the last year, who are probably struggling in some way financially. What are some of your top tips, other than the great things you've already given us, that will help people to really, hone in on what they can do today? So maybe they don't necessarily need your services right now, or maybe they do, but they're saying, hey, you know what, this is some really important stuff. I need to take a closer look at it. What kind of advice would you give them?
Well, because we are in a COVID environment, one thing I will caution people on is seeking help. And that's a caution I'm telling them. The reason why is that a lot of people took help, COVID help, from their creditors. And the way it rolled out is that they were required to help you, but how they help you was up to each individual company, right? To a certain degree, how they ultimately rolled out that help is going to be done on a case-by-case basis and a company-by-company basis. And what happened a lot of times is, hey, I called my credit card company and says, I can't pay, right? And it says, okay, well, we'll defer it for 30 days. Okay, great, click. Again, the first behavior in credit repair that we look for is that you're cognizant of what's going on around you financially. And just knowing that, hey, I don't have to make a payment this month isn't enough information. And now what's happening is that these creditors are calling you back and they're saying, okay, you owe us for 90 days worth of payment. Okay, you owe us for 6 months worth of payment.
Yeah.
As a balloon payment.
Yeah.
Or your mortgage is now 6 months past due. Or, we're going to come get your car on Friday if you don't make a 3-month payment. So if you have entered into a helping relationship with your lender or creditor or merchant or whomever, you need to give them a call and say, look, I really need to understand the nature of the help and what happens on the back end. What are the consequences of the help? And this is where we're getting a vast majority of our customers now. And it's the people who got help and now they need help from the help. Okay.
Oh, yeah.
So if you're in this COVID environment and you sought help, make sure you go back to them and get something in writing, because I have yet to find anyone that got anything in writing in regards to their help. And it's hurting.
And what I hadn't even thought of this on so many levels, but I have two thoughts. Number one is, also with renters. So you might have gotten, you're not going to get evicted, but at some point in time, you're going to still have to pay those months of rent you didn't pay, or you will be evicted. There will be that point. But even within small businesses, like I got a small business loan, a couple months into COVID, and I know now I've got the terms, I've got all the details. I know when I have to start repaying that, which will be in July. I think I'll go verify after this, but I just was actually looking at the paperwork yesterday.
Agreement,
yeah. I can't remember if it was June or July, but I want to make sure, because I don't want to even miss one, even though they're very small in terms of the repay. But what was interesting is when all those loans were being thrown around for small businesses, there was a lot of talk about how many of them might be forgiven, or you may get this and they'll never ask you for it back. So, we were all in this kind of, brain fog of, okay, well, at least here's some money. I can keep my team going for a while. And luckily the amount that I got is not something that's crazy. And, they actually gave me like 30 years to pay off a small loan. I would never take that long to pay it off. Right. But I'm thankful for that. But how many people are like me too, that maybe they didn't realize that all those between the PPP loans and the SBA loan and this thing or whatever, unless it's a grant where they say, here's your money, we don't care what you did with it. Even if they said, here's a grant, use it, but we're going to come back in a year and we're going to audit you to see how you used it. If you didn't use it the right way, you're on the hook for that money again. And so there's
this is government funding. It does not go away. This is not a credit card where there's a statute of limitations. This is like student loan, government-backed student loan debt. This is like Military Star. This is IRS. This is money that even as a business, you're not going to get away from, because there's a guarantor. You signed as a guarantor, so you personally will be held liable for that debt. And I got a feeling there will be a lot of default on it, and I don't know how they're going to handle it. But really, if you got a government-backed help like SBA help, it's so nominal as far as the payback, like yours, like you said, 30 years for a $10,000 note, you know what I mean? But if you got help from your mortgage company, that's a big difference.
Absolutely. And if you have multiple of these things, they can stack up and overwhelm you, if you're not
financially choke you out. And if you find yourself now struggling with items that are on the credit report, the first thing you're going to want to do is, get a copy of the credit report. You can get it for free. You don't have to pay for it. You go to, and during COVID, you can actually get one free credit report every week. So you can go in there. Usually it's once a year, but now you can go in there every week and get a new copy of your report. And all of this is, it's for a short period of time, but it's there. Now, I will caution you, if you do notice there are errors on your credit report that you need fixed, and it's time sensitive, recognize that the 30-day moratorium for them to get back with you, it doesn't work anymore.
Yeah, it's out the window.
We're in a national state of emergency. So until 90 days after we are not in a state of emergency, national state of emergency, the bureaus have as much time as they need to address disputes. Okay. So, don't expect a quick response that you normally would have. And a lot of times what I tell our customers is that really, if you're going to dispute something on your credit report, you really don't want to dispute with the bureaus. Right. And again, understanding the relationships that you're in, you are not, as the consumer, the customer of the bureaus.
Right. That bank or that lending institution.
Yeah, you are the natural resource of the bureaus that they buy and sell. Remember, the bureaus are not nonprofit. They're not government. They are for-profit companies. They are Walmart, and they're selling 64 different versions of your credit score. You don't have 3. You have 64, one for the mortgage industry, one for the credit card industry, one for the insurance industry, one for the rental industry. And each one has a different aspect of your buying behavior that they're interested in. So each one has a different score, right? And their job, the bureaus, is to collect as much of that information as they can and sell it to them. Your credit report isn't for you, it's just about you, right? Yeah. So, you got to start remembering how that works. So I would always recommend is as you're doing your disputes, you want to dispute directly with the furnisher of the information, not just the bureaus, because really the bureaus, their job is to then go to that debt collector or that creditor anyway, and they're going to make it very easy for that person or that business to validate the debt because they're paying them money. You're a business owner, right? Yeah. As a person call the bureau, every time you call them, you can get something for free, right? Free credit report. You can dispute everything on your credit report for free. They've got to send you the update for free, their responses for free, right? But that's from your perspective. From their perspective, every time you call, it costs them money.
Yeah.
Right. Yeah. So you got to kind of keep that in mind that, really, you're not going to get a lot of help from them because you're complaining about their paying customer. So go after the furnishers directly. You can get a lot more information about the debt. Again, credit repair is not about skirting your obligations. It should actually be the opposite. Right. You want to be like that couple you talked about where you've got the ability to pay those bills on time. That's what's important. What's not important is your ability to trick the system to get out of it. Right. What's important is that you've got the capacity to do it. That's
Right.
what you're looking for ultimately. You got to make sure that, you're worried about your credit behavior, not your credit score, right?
Right.
So again, start with the copy of the credit report after you've made your budget so that you know how financially you're going to address everything. You then take a copy of that credit report and start looking at the items that are on there. Now, if you've got a goal in mind, like buying a car, business loan, buying a house, whatever, before you start paying stuff off, right, you need to go to that lender and say, okay, lender, here's where I'm at. What are your guidelines?
Yeah.
And whenever we do credit repair, that's where we start. We'll go to that lender and we'll say, okay, we're going to go for a VA loan or an FHA loan or a conventional loan or whatever, or SBA loan, a 7 Express SBA loan. My credit score needs to be this. My debt to income needs to be this. My work history needs to be this. My cash on hand needs to be this. They're going to give you the guidelines.
Right.
Now you can start to customize your credit repair to meet the guidelines of that loan. That's becoming lendable, right? Because that's what your goal really is.
Right.
It's not to fix your credit, it's to be lendable. And there's no point in throwing darts in the dark when you just turn a light on. So understand what the goal is first, because you may find that that lender doesn't care about certain types of debts. It's like old medical debt or debts that are beyond statutes of limitations, which is how long you would legally owe it, but can still be reported, that kind of stuff. So have that conversation with your lender first, then start to address the items on the credit report, because you may be spinning your wheels or spending money where you don't need to be, right? That sort of thing. And then customize your credit report to meet those guidelines of that product or security clearance or whatever you're trying to do with your credit.
Right.
Now, if it's ultimately just get out of debt, then really, again, that's your budget. And you can then use that credit report to figure out, well, how am I going to prioritize what I pay based on what my budget tells me I'm allowed to do? Because if you go to settle a $3,000 debt and you've only got $50 in your checking account, you're kind of putting the carriage in front of the horse. You know what I mean?
Absolutely. Oh gosh, Michael, there's so many great pieces of information here and things that I just had never ever even thought about. But
not some
just
common sense approach, right?
Yeah. Well, and just the very idea of thinking, okay, maybe I want to buy my first home. Just the guessing of what you think your credit score needs to be whatever is not the answer. Go to your credit union or wherever that you might want to get pre-approved and say, I'm going to want to get pre-approved.
Yeah.
But before I do that, what are you looking at to pre-approve, and what's the difference in what that might be in interest rate or whatever? Because if you know, okay, well, we're looking for this to get you this interest rate, but here you'll get this interest rate, then you can really make some smart decisions, and it looks a lot better for you to that lender when you go towards them initially with the right profile.
Exactly. Yeah. It's like we're doing a video shortly, and it's a take on the love languages, right? You got to know the love language of your lender, right? You got to give them what they're looking for, because you can give them all the things you want. If it's not what they're looking for, you're still not getting the loan. That's what I'm saying. You can walk into the bank with an 800 score and still not get the loan.
Yeah.
It's not about the score.
That's true. Gosh, Michael, I know we're going to talk about just a couple of things as we wrap up, but before we even talk about that, you're based in Tampa Bay.
Yes.
Do you work with people all over the U.S.?
All over, yeah. We've got customers actually all over the world, especially with our military. They're deployed in different places, and we work with them. So yeah, wherever you are, we can work with you.
Excellent. Well, before we will have all your contact information on our show notes, but just in case somebody wants to look you up right now, what's the best way for them to find you?
There's a couple of places. Of course, you can always check out our website, deltacreditrestoration.com. We've actually got a self-help YouTube channel, so go there. We've got over 100 videos. They're not commercials. It's not hype. It's not, the infomercials. It's actual the techniques on what you want to do, from everything from student loan debts to repos to negotiating debt, the whole nine. So you can always check us out on YouTube and just look up Delta Credit Restoration on YouTube. Or you just give us a call. We're here way too often. Like I always tell my clients, we only work a half a day, which is 9 to 9. You know what I mean? So you can give us a call. We're at 813-567-5855.
Excellent. Michael, before we go, do you have any last words of wisdom or pearls of advice for my listeners and viewers?
Yes. If you're seeking help, which you should seek help. There are a lot of professionals out there that can help you get your credit right, but you've got to be careful when you're dealing with credit repair companies. Never pay a credit repair company up front. I don't care what state you're in, there's a federal guideline that says you don't have to pay, you have a 100% money back guarantee policy for the first 3 days. So that gives you an opportunity to listen to that person, find out what they're offering, do some research on that company before you have to financially make a decision to join. If there's a workup fee, a sign-up fee, an opportunity fee, or whatever, you don't have to pay that, at least for the first 3 days. Also, you probably want to avoid multi-level marketing companies. I love multi-level marketing companies, but you really want the person that's gathering your social security number and your credit report and those things to be the actual person working your credit profile, right?
Right.
You don't want to be part of someone's downline and someone on that downline is actually working your stuff. So just be careful. If it sounds too good to be true, if they're giving you this, you're a Superman and the debt collector doesn't have any rights and all you got to do is mail this letter and it's going to go away. If it's hype, it's probably not right. So just be careful, because this is your future. This is your financial future that they're playing with, and you just got to be real careful. But either way, the first thing is make the choice, make that change, because it doesn't usually take a lot on your end to have a big dramatic change on the other end. It's like the planet. If you've got water and at 1 degree it's water, 1 degree change it's ice, 1 degree change in the other direction it could be gas. You know what I mean? So it doesn't take a whole lot to make a big impact, but it just takes a plan before you start stepping into it.
Excellent. Michael, thank you so much for all of your great advice and your great insight. It has been a pleasure to have you on our podcast.
Likewise, I appreciate it.
Thank you for joining us on another episode of the Shock Your Potential podcast. Learn more about us today at shockyourpotential.com, including details on Michael's 2 best-selling books. Tell me more how to ask the right questions and get the most out of your employees and sales mixology, why the most potent sales and customer experiences follow a recipe for success. And as always, don't forget to subscribe, rate, and like us today.